All right. Well, just like death and taxes, we knew it was all coming. And what was that? Well, Bed Bath & Beyond has finally declared bankruptcy. Now, I don't think anyone should be surprised, but what I want to do is kind of use this stock as a little bit of a tool because there's been so much misinformation about it over the last few years, and we had the whole Reddit craze, and the chat room stuff, and the Discord, and the that cord. Yeah, I don't even know what the hell all that stuff means. But I do know that in the institutional trading world, where I spent more than 2 decades, there are certain things to look at. Now, when we look at a company's what we would call their fundamentals, that's metrics that what we call fundamental analysts look at. Is the company losing money? Is the company making money? Are things going from worse to not worse? Are things going from great to less great? This is what fundamental analysts look at. And their technical analysts look at the market. They look at how the stock is particularly trading. All right. And it's not that one style is better than the other. People have different personalities. You just got to do what fits you. But in this situation, both of these metrics like basically sucked. So I don't know how anyone could be surprised that this is happening. So the first thing I want to do is take a look at what we call the financials. When a company releases their quarterly earnings, they release what we call an income statement, a cash flow statement, and a balance sheet. Now, you don't need to be really hardcore on all this stuff. I'm not. I certainly aren't. I mean, I know people that delve into this stuff. I'm more of a trader, but I think this is a good example or a good learning experience to see what's going on here. So now, after I show you what I'm about to show you in 30 seconds, you're not going to be surprised that Bed Bath & Beyond is going out of business. Okay, so this is the income statement. And in what we do in the institutional trading world is we look for trends. Are things getting better? Are things getting worse? Well, here it's pretty darn clear things are getting worse. In the quarter they reported that ended in November of 27 of 21, they lost $2.78. Okay, I mean, that sucks. Maybe there's a chance they're turning it around. But they're not. In the quarter that ended in 2022, a year later, they lost 433. They've gone from losing $276 million dollars to losing $392 million dollars. If you go back the 9 months, and a lot of times companies like to do that because it's like the prior 3 quarters. Okay, the 3 quarters that ended in November of 21, they lost 400 million. 2022 they lost 1.1 billion, almost 3 times as much. So listen, you don't need to be Warren Buffett, okay? And on Wall Street, things really don't need to be as complicated as they seem. Wall Street likes to make things seem complicated because they can charge more money. There's also the guru of the day. It's not as complicated as it needs to be. And as a stock market jobber, I am glad that you are here because this is what we do. We look at things in the market, we look for things that are out of equilibrium, and look for ways to make money. I mean, look at this: 3 months operating loss, 86 million to 450 50 million. And then this here, gain or loss on establishment of debt. This is just accounting stuff. Trust me, this company. Well, I was going to say this company is going out of business, but I guess they beat me to the punch. Okay, enough of that. Now, from the technical point of view, let's go take a look at the chart. Now, now, if you're someone who follows this stock, you probably remember the gamma squeeze last August. Gosh, it's hard to believe it's been almost a year now. But the deal was the stock was trading low. This guy Ryan Cohen, who was an activist investor or someone who was interested in investing so much money in the company that he could have kind of a say what they do. Allegedly, supposedly, I don't know if it's true or not. It went around Wall Street. Everyone talked about it. Whatever. Okay, he bought all these calls around that had strike prices around $80 or $90. A call is a contract that gives you the right to buy a particular stock or whatever security, but in this case, the stock at a certain price. So if you have a call that has an $80 strike price, well, you have the right to buy the stock at $80, regardless of where it is. It could be at two, it could be at 1,000. Okay, so clearly the guy was buying all these contracts. Well, I mean, allegedly, I don't know for sure, that were way what we call out of the money. I mean, if the stock's at 10, what's the point of buying the contract that gives you the right to buy it at 80? Someone could just go on the market and buy it at 10. So this kind of myth, or I don't know, urban legend, I don't even know what I would call it, went around that, oh, there's this thing called the gamma squeeze. Okay. So the market maker shorted this stock at 80 to these, people that are buying the options. So they're going to have to go out and buy the stock to cover their option position. And that's going to drive the price up. Well, you know what? I spent 2 years as a market maker, and I don't ever remember talking about a gamma squeeze. I mean, wouldn't common sense just suggest, well, hey, if you got to offer out these contracts to make you have to sell the stock at 80, wouldn't you just buy a different option that gives you the right to buy it at 70? I mean, I never got this whole gamma squeeze thing. It was a myth. To be perfectly frank, I think I lost a couple friends over it because they just didn't want to listen to my advice. I mean, not friends, but just people I trade with. No real friend would be upset if you gave them good advice. But anyway, let's go back to August. Gamma squeeze, gamma squeeze, gamma squeeze, gamma squeeze. It's almost like a terrible song. You know who I hate? I hate the Beach Boys. I hate that high pitched squealing. But anyway, forget that. Market principles, a lot of times, or actually probably 99% of the times, are more important than what you're hearing on the news, what you're reading in a chat room. One of the things that I talk about is stock market jobber. I know it gets redundant, and I know some people get sick of it, but if you get sick of it, then don't be here. Go, join another website or start a website that I'll subscribe to if you think you know what you're doing. But one of the things that's really important is the fact that some price levels are more important than others. Now, look at this. July of 21, resistance around 30. Early 22, resistance around 30. Gamma squeeze, gamma squeeze, gamma squeeze. Where did we find resistance? At 30. Forget the news. If I was on a desert island and I didn't have access to the news and I had access to the charts, my research would not be that different. As a matter of fact, probably the only reason why I watch the news is because I'm either bored or someone who's one of my students has asked me a question about it. And if they ask me a question, I'm going to look into it as hard as I can because that's what I do. I give my students 110%. But anyway, gamma squeeze this, gamma squeeze that, UFO this, astrology that. Forget that. If you were a trader of this stock and you saw, oh, it got to a prior resistance level, there's a good chance there's going to be resistance there. I'm going to sell. And guess what? It was the perfect time to sell. Now, why would there be resistance at a level that was resistance? Think about this. There are people who bought here who regretted doing so when the price went lower. There are people who bought here who regretted doing so when the price went lower. A lot of these investors tell themselves, I made a mistake. They have buyer's remorse. And they tell themselves, if I can get out of break even, if this thing gets back up to 30, I am going to sell it. So the stock gets to 30. You have this large concentration of sellers. And why did it go down? Well, you got all these people that are trying to sell to 30. A lot of them are like, all right, you know what? I bought it at 30. It looks like it's going lower. I don't want to take a loss. Maybe I'll take a small loss. I'll sell it at 29. Someone else thinks, yeah, the same thing, but I'll sell it at 28. And we start this snowball effect. So that's my little take on Bed Bath & Beyond. You don't need to, you can learn what you need to do to make yourself a successful trader. You don't need to listen to CNBC. You don't need to talk to people in chat rooms. Forget Reddit. Just listen to the market. Watch what the market tells you what to do. In this case, if you were on a desert island and you had no idea what a gamma squeeze was, guess what? You would have sold the stock when it got to a prior resistance level. You would have gotten at a good price, and you probably would have made a lot of money. All right, everybody, thank you so much, and I will talk to you soon. That's tonight's blog.